Hey there, think the size of your investment defines the outcome of your trade? Once again, my friend, it's not the size, it's how you use it. Well, the size actually also matters here, but we'll get to that in a second. Welcome to the Olymp Trade channel, the place to be if you want to up your trading game. So, how much money do you need for trading? Technically, you only need to deposit $10 to open a $1 trade and start trading on a platform. But will you be comfortable with that? I mean, if $10 is all you have, and you invest it all into trading, then won't you be so stressed about this that all your trades go south because your hands are shaking? The question of how much to invest usually has no simple answer, except the one I already gave you. We have to consider the specific situation and objective to figure out the most optimal investment in each particular case. Let's have a look at some key considerations. First, if you're a beginner, start small. That $10 deposit I mentioned earlier will be enough to spread across 10 $1 trades. With that, you'll have healthy risk exposure and you won't lose much even if all your trades go badly, because it's only $10 anyway. At the same time, that will give you a lot of trading experience, the most important return on your first investment. Second, it's important to know how the platform's trading modes work and use that knowledge to your advantage. With FTT, you forecast whether the price of the instrument will rise or fall in a specific period, and the profitability of your trade is fixed. A successful $10 trade on a trading instrument with an 82% profitability will bring you $8.2 of profit. So your initial deposit of $10 will increase to $18.2. As you can see, with this trading mode, your initial investment can easily increase in size, but at the same time, it can drop to zero just as quickly. Here is a way to calculate a comfortable FTT budget. Choose an investment amount for each trade depending on its potential profit, which is profitability times money invested in the trade, then divided by the deposit percentage you're willing to risk, and make sure you're okay to lose it if the trade goes badly. For example, if you are willing to invest $8 in a trade with a 5% risk, that will require a deposit of $160. In the Forex mode, you also make price forecasts, but your actual profit depends on the distance the price goes in your favor from the level at which you open the trade, but you can't know it in advance. And there is also a multiplier to consider, so it's an entirely different setting, and figuring out the required investment needs using a different logic. Here is how you can calculate a comfortable Forex budget. Define the maximum amount you're willing to risk and set it as stop loss, then divide it by the deposit percentage you're willing to risk, and make sure you can afford that if the trade goes badly. For example, a $20 stop loss on a trade with a 10% of acceptable risk will require a deposit of $200. On a separate note, with Forex trading, your take profit needs to always be set higher than your stop loss to ensure that your account grows. So, it would be good to put a $15 take profit on a trade with a $5 stop loss. If you use a multiplier, you can access higher value trades. So, with an X50 multiplier, using only $5 of your own funds, you can open a trade of $250. But be careful. Each point the price moves in your favor will bring you more profit than it would have had you not used the multiplier. But if the market goes against you, you will lose your trade faster as well. To sum up, invest the funds you're prepared to lose. If you're a beginner, start small. Determine how much money you want to make on a trade, figure out its volume, and based on that, the required investment. Focus on your risk tolerance. Don't fall victim to an unrealistic expectation of making fortunes in just one lucky trade. Be smart, be logical, be consistent.